Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief Recap. We've been having some fun challenges here this morning. So before I get going, I want to just make sure the YouTube page is actually working here. We've been having Yay, it is. Yay, whoopee. All right, so I think we got our head on straight. We've had a interesting daily brief. I think we had to do 3 or 4 versions of it, but nonetheless, we got it done. And actually, on Fridays, a real special treat, we have Colin, who actually used to be a paid-for analyst on another site through the crypto alt market heyday. He came on, he is a TRI alum and a longtime member. He came on the site and did his Friday Colin report. And actually, I don't know whether we have a name for Colin's report. We should probably give it a fun name. We've got the baby powder report, and we've got the Lego report. Now we've got Fridays. If we're lucky, Colin comes on and gives us his report. He looks specifically at the crypto market. And he has this really cool sort of breakdown of how he filters coins, a list for location, a list for confirmed divergences, and then a list for structure. And as names move along this sort of screening list, he moves the name from one list to the next list to the next list. So what ends up happening for him is by time coins make the pink list, I think that's his number one list, these coins are all ready to go. And he's just literally waiting for the W's to come in and pulling the trigger. Not a bad idea for you to do similar. There's no reason why you can't do that. So if anything, that's a nice little value added piece. And like I said, I did an excellent report today, whole bunch of new ideas. And it being Friday, I really like the idea of having a Friday sort of crypto-centric report, getting ready for the weekend frivolity. As we usually do for these free videos, I like to keep the conversation relatively limited to, what's the hegemony proxy doing right now in the global economy and all that kind of talk. US dollar continues to surge higher here. I think I've told you guys of late, I'm not overly impressed with the new central bank governor, a lawyer at that. Oh, God. Running the ECB right now. I can't remember the last time lawyers made good bankers. And actually, it was interesting. On sort of a side note, I encouraged all of the site members to take some time and listen to Mr. Druckenmiller. Anytime Mr. Druckenmiller speaks, I think everybody should just stop and listen. Not only is he an extremely successful trader, what I really like about listening to Stanley is his very down-to-earth approach. I mean, he understands the way the game is played, their side, our side, and all those kind of things. Very down-to-earth approach. So it was just interesting listening to Mr. Druckenmiller. I got to say, I have to agree with almost everything he said. There was a couple things that I didn't quite agree with. I don't know whether I'd be as long copper as he is right now, but that's here nor there. But one thing he did absolutely say is, it's dangerous having a lawyer running a central bank. It certainly does not fill a guy like me with confidence to be investing in her. And of course, as we've sort of talked about recently, this euro just looks like an absolute train wreck. It's like one of these sort of slow motion train wrecks where you literally see the train wreck as the cars are slowly falling off the rails and metal's being crunched, and it's a disaster here. And I'm worried because, I also had a very long conversation with another longtime site member who I highly respect. I think the gentleman is very, very intelligent, out of Germany, and sort of reiterating my sort of, my view that North America will probably do okay in this coming economic pullback. The damage to the U.S. Economic system, of course, was all that bad debt. And if they were going to break the United States of America through that 2008 financial crisis, that was the time. I would actually make the argument that, demographically, sociologically, all that kind of stuff, the United States of America has sort of moved on. And I can already start to feel it here in North America. We're starting to look for that next generation. Keep in mind, these things usually have to hit the reset button, and that's usually in the form of a recession. What I'm really worried about is this could get really, really ugly for Europe. And of course, if Mr. Trump does continue on in office after November, nothing's going to change for the next 4 years of the tone of the market. And if anything, it'll probably accelerate because everybody's going to throw in the towel and just be like, okay, we have to get used to this sort of new world order. So be careful here on Europe and European currencies. What I see is a big rush into the U.S. dollar. I'd also make the argument, too, that U.S. econs came out today. Fairly robust, pretty strong jobs market report. Unemployment rate actually ticked up a bit, but the irony of that is it actually implies that more workers are coming into the labor pool. Hourly earnings still relatively stagnant, so that was sort of the one concern from the Fed, and if anything, that's one reason why the bonds are actually relatively happy, even though it was a pretty strong jobs report. But I would just simply say it's the same sort of thing. If you have a really strong jobs report, is the Fed likely to cut interest rates anymore? Not likely. They've already given the market the ammunition, but interesting enough, this is sort of the same as Mr. Druckenmiller. Please understand, everybody, the Fed has basically said, you got a clean slate. Go have fun. Here's all the free credit you want, right? And we'll even go into the repo market, and we'll guarantee the short-term interest rate market. Don't worry about it. And Mr. Druckenmiller's like, that's a potion for a bull market. And my feeling is that once the election's over, then the pressure for the Fed not to be perceived as influencing the election process, that disappears. If we keep having these strong jobs numbers and the economy's rocking and rolling and stock prices are ripping higher, well, do you think the Fed's going to be like, okay, we have to worry about the economy? No, they're going to be like, okay, now time to start taking the punch bowl away. So, the basic message I've had is, probably look for higher stock prices in general through the first sort of 6 months of the year. And then once we sort of get approach the election and then following the election, oh boy, all bets are off. So just, that's the backdrop that I see going on in the world. As we've talked about here recently, stocks actually broke to new highs yesterday. So, no M top there anywhere in sight. A little bit of a sideways day here today, but understand too, this is options expiry day. Through the baby powder report yesterday, Julian showed us where the heaviest open interest in the calls and puts are. So really on balance, it shouldn't surprise us that they literally take the market up to a level that they really want to have the market expire, so they clean up on the options, and then they just park it. So I think that's what's going on here is basically the stock market is parked at exactly the level they want it at. Haven't got the turn out of oil just yet. So on balance, I am looking for that bottom through mid-February here. Not quite sure exactly what it's going to look like. Nobody does. But heading out of sort of mid-February, I'm liking the idea of oil moving higher. But that's like a week or two away. So in that interim, what I see, of course, bonds came back to this uptrend line. You can see that's a low to high to low trend line. That's a pretty damn powerful line. You could pretty much tell if the market loses this trend line, then we're back in the bear. But it didn't. Now, I said the other day, which surprised me, is we had like a 5-bar fractal here. Maybe that was just a bit too much. And if anything, we might even get a 3-bar bullish fractal here. Keep in mind, fractals happen all the time in the market. So as I've been sort of saying earlier, and I kind of was feeling, okay, we got an empire top, we got a fractal, okay, look for a top in bonds. If anything, what I would like to see is the market rally back up into the top end of this range, roll over, lose this trend line, paint a big M, and then we know, okay, fine, interest rates are now going back up. So, and actually I'm a little sort of scratching my head here today, just wondering, pretty strong jobs numbers. I did notice that they revised some of the bullish numbers from previous quarters back down. I think last year's overall job number, they revised it lower. But I'm a little surprised to see the bonds actually as strong as they are here this morning. We've been talking recently about gold. Hasn't really topped, but of course it's way off the lows. So very, very difficult to be a bull here. And what I'm really worried about, of course, is that this thing goes and M's out, and that seasonally is the topping period for gold. But I might make the argument right now, just looking at gold in itself, I think we have a pretty well-established trading range. If you see price comfortably above 1,600, then we got another leg higher to go here. And if you see the market, I'd probably even say if you saw it close solidly below, say, 1,540 or so, something like that, then probably heading back down to the lows. Right now, just sitting in a range, and we might one low, two lows, put in a third low. And if that's the case, and I got a stable floor to risk against, then I could start thinking bull. But for now, I'm just sort of just watching. What am I doing in the market? Was really happy to see, got banged off a nice double on this ADRO. I tried to show you guys this chart yesterday and I couldn't find it. But anyway, no big deal. I think I went long off of this double bottom breakout here. So we were getting up into areas where I should have been a seller. I did have my order sitting up at 280. On this guy, and I got my fill here this morning. I actually believe it or not, could get well above $3 here, but you know our rule. Once we get to the 50% rule, then we ought to start cooling our jets. So anywhere up in here, basically sold half on a double. I have a risk-free trade in this stock now going forward. So there's a great example of a W working. Here, unfortunately, is an example of a W not working. Boo. SS boo. I bought this W down here. Was feeling really proud of myself. Woo, look how smart I am. If anything, Brian committed the cardinal rule, or actually broke a cardinal rule of trading. I think I went long here. In that, I was sitting on a very comfortable win. We came down to my entry level. I probably should have just walked away at scratch. It's not a good idea to get into the habit of letting winning trades turn into losing trades, but nonetheless, when we broke this low here this morning, that was my message to walk away, and so I did walk away, I think actually at like 156. So at least here's one where it broke down politely and didn't gap lower, so when it did lose these lows, I just walked away. So good example, there's a win. There's a loss. What I ideally want to see happen here is my average size of my winner is bigger than my average size of my loser. That's what we're trying to do here. I remember my old prop firm used to always say this, the secret to trading, it's really simple. Just make sure your average winner is bigger than your average loser. Just keep doing that over and over and over, and you have no choice but your account balance to go up. So there's a really good example. Trade size is exactly the same. One winner, yay. One loser, boo. The good part about, selling half on a double now, technically on this position alone, I don't have any more risk, but it also leaves me open to the opportunity that this thing can keep going. And the irony of it all is actually, I think this thing could go a long, long way. What do you think? Has that got any room to run here? So, yes, I got to, pay myself as we're working higher. But I've also left myself in a position where, if this thing wants to just keep going, fine, just keep going. I'll sell another half on another double. That kind of thinking. So that's what I'm doing in the stock market today. Woohoo, party. Over in crypto, I got to tell you, man, crypto is looking HOT hot right now. Nothing's changed really in this conversation. We are fast approaching these upside bullish objectives, looking for that 50% rule tag of the entire range. Has this chart changed at all? Have I changed anything on this chart? Not really. Higher highs and higher lows defines a bull. Try not to chase, because if you buy up here, where do you have to risk to? Where if it loses that level, the market has told you that you're wrong. Believe it or not. Yeah, I hate to say this. I mean, it just the most simplest of traders' trades, right? Is breakout, and you see breakout, and notice the check, right? So here I could I don't know whether we're done here or not, but you know that at some point, if this is Wycovian, probably gonna have to come back and check that breakout there. So, yeah, and then also too, let's call a spade a spade. I've got on reload zone short levels off of this rally. Obviously we have to adjust that now. I can find the damn fib. Which one is that here? Yeah, you're right in there, aren't you? All right, up we go. So if I wanted to buy, believe it or not, I have to actually just sit and just patiently wait. There is reload zones right there, right? Boom to boom. And notice also too, look at that. You see how there's a big muak right there in price. So I'd love to see just a big slam down here, fill in the muak, and then turn back up. And of course I talked to you guys yesterday about the big secret, the big tell. And there is that upcoming Silk Road auction event window, which, as you can see, and this is the good part about this current market state, is according to our calculations 11 days away. So that means over this basically about a week and a half window, guess what we get to do in altcoin land. And I got to tell you, like I said, Colin did a really good report today. As I've sort of told you recently, I would expect this altcoin sort of little counter trend rally, and also too, if you look at things like Bitcoin dominance, where the hell is it? There it is. You can see it's breaking in earnest here, right? I was wondering whether we were going to hold these lows and turn back up, but no, sorry. I also think too that this whole dominance is really just a conversation about whether anybody's interested in buying Ethereum. And of course, Ethereum has enjoyed an immense rally here. Thankfully, we still have our calls on the books. And actually, this is a really cool example. I think I said yesterday, one of the reasons why I like playing options market is option premiums are totally emotional. And so tell me, what do you think? This is a weekly chart. Let's put this to a daily chart. What do you think the emotion is out of the public right now for something like Ethereum? Right? Excuse me. You should look at this and go, yeah, they're probably slightly euphoric. So as a result, option premiums themselves go gangbusters, way overvalued. And in this particular case, this is a treat. We bought the $200 calls way back here. Sold half on a double, got our risk-free trade. And Shane was reporting, and you see our target, the 50% rule, is $239.67. Basically, I'm using $240 as my target. But that basically implies, and this was our logic, right? We bought the calls at 11 ticks, and at the target, it's $200 strike. So 240 minus 200 at the target, these things should be worth 40 ticks. So 11 ticks to 40 ticks. That's not a bad trade, eh? Would you take that? I think so. Turns out we got filled at 60 ticks. 11 ticks to 60 ticks. Now that's trading. Anyway, the point of the matter here is this option right now, this option has 21 ticks of intrinsic value. And somebody bought it off us for 60 ticks. Like, what the hell? We're just taking advantage of it. Might as well. I mean, if people want to pay ridiculous prices, we'll be more than happy to sell them to them. So, ironically enough, actually, we're starting to get off just ridiculous. That's 6x, right? 60 ticks from 11 ticks. And we haven't even approached our target yet. I don't know what these damn options are going to be trading at 240, 250. There might be like 100 ticks by then. So this is now, we're in the process of spoon feeding the market. That's basically what we're doing. You know, we got like, 5 of these contracts left, and we're just slowly spoon feeding the market as people want to pay ridiculous prices for these things. So that's basically the market state. And I sort of made the argument that Ethereum actually has a long, long way to go to catch up here. So I wonder, and I'd sort of postulated it publicly, if my feeling is it's almost like the whole altcoin market almost needed Ethereum to get off its butt and get going. And now notice, look at this. This is Tron. Why is this doing this? This is, I think, like kind of like a clone of Ethereum, but with a bazillion, gazillion, jazillion coins out. But, W's are W's are W's. And what's really cool, and the tweet that I put out on this one, the message was, this is a really good textbook example of V-bottoms with moving average crosses, which produce okay rallies. But now we're going to get a structural bottom with a moving average bullish cross. The institutions are going to look at this and go, there's your bottom. So super, super cool to see. Anyway, long and short of it here, like I had sort of said earlier, I'm going to be watching these bull perp indexes for sort of my tell that the bull is done. We'll see start M's and that kind of stuff start coming in to signal that. And, here's a quote. I don't know whether you like Doge or not. I'm not here to pitch the story. Hopefully everybody looks at this chart and goes, okay, well, that Beamish guy here, why would he be interested in hunting longs? Hopefully you can see W's are trying to come in here. You can see 50% levels are gazillions and jazillions of miles away. I mean, hell, you can even get a double off just on a 50% tag there. And does this thing have any room to move up? Historically, we have this funny joke, Shane and I, that at some point this gap up top here is going to be filled in. Who knows when, but it is kind of a running joke that we have. But could you get a double off on something like this, Doge here? I don't see why not. And the point here is we don't want to chase stuff that's already zipped up, right? The worst part about the public is they always come in and they buy markets after they've moved up. And then they complain about losing money, and you ask them, well, what did you buy down market or did you buy an up market? Well, I bought it because it was really hot and everybody was talking about it on Twitter, blah, blah, blah. And actually, there's a really good example of that right now in that Raven coin. Colin mentioned it today in the broadcast. Remember I had mentioned to you guys this Netcoins. Holy geez, keep an eye on that. Somebody just came in here and today bought 100,000 shares. So obviously there's some business getting done here. Do you want to ride on their coattails? Well, it's up to you. But RAV, I think it was. This is a perfect example where this thing was all the rage last year. I mean, it was just sex. Look at that move last year. And notice that they just brought the market right back down into reload zones, all that kind of stuff. And gee whiz, here come the W's and all that kind of stuff. So, problem here is don't go and chase this now. That's asking for trouble. Maybe you can add this to your watch list and draw up reload zones and work some stink bids. Nothing wrong with that. But are there any coins that are just sitting there and haven't started to move yet? And the cool part about this guy, I think, is it looks to me like she's basically just trying to bottom in a reload zone. So, get out there and have some fun in this market. I think for like the next 10, 15 days, this is a really, really interesting market. And I think there's money to be made here. So go have some fun. All right, everybody, I'm going to leave the free video at that. I'm going to go count my Adoro profits and make sure that they are larger than my NMCI losses. It's a trader's life. Just get used to it if you want to play this game. Just make damn sure your average winner is bigger than your average loser. That's the secret to all this. All right, guys, have yourselves a great day. All the best, and bye for now.